All right, guys, we got first interview coming out strong. We got Tim Stone. Find him on Instagram. Tim, what's your Instagram handle?
It's at I am Tim Stone, like the letters I am. I'm
Freaking
I'm
love.
in the I'm in the process of getting at Tim Stone right now, so it may change, but yeah, we'll see.
Well, well, real quick, I love it. First 30 seconds, we're already off course. Me and Charlie are kind of experts at getting off track with like side, weird side things we're doing for money or whatever. What's the process? Before I want to get deep into real estate with you, but like, do you mind sharing? Like, are you trying to buy it or what's the deal?
So the last guest I interviewed on my podcast has at multifamily on
Yeah.
Instagram, and he knows somebody at Facebook, and that's how he got it. So he's trying to hook me up.
Okay.
How the process goes is they have a requirement, like the account has to have been inactive for a certain number of years, and then they can kind of justify switching it over.
I love it.
So,
Okay.
so they're going to see if at Tim Stone is actually using their account, because it's private. So I don't even know.
Okay. Cool. All right.
That's how it goes. And then you just got to, pay someone under the table at Facebook, I guess.
Yeah. Hey, I'm doing this, or I'm in the middle of a development deal, and our general contractor, he's like, there's a line item. I'm sure you know this. It's called like general conditions, and it's basically like, yeah, there's problems, and that makes problems go away, and that's the cash. So, yeah. All right. Well, give us not necessarily like an intro, like, because we got a lot to talk to you about. Like, just tell me what you're doing now, because I know, like, I really just appreciated your story. Like, you've just gone like really fast, like really strong out of the gate. So I want to just hear kind of where you're at right now, like what deals you're doing, like what are you focused on?
Yeah. So the last 2 years, I've been doing multifamily deals with a couple of partners, and we've been doing them mostly here in Chattanooga, Tennessee. As of right now, I mean, I'm about to close on a duplex by myself. That'd be my first deal completely on my own. It's nothing too crazy, but we're stabilizing a 45 unit that we're going to try to sell here, depending on what the market does, or if, we might keep it. It looks like we'd be able to keep it, but we just sold our last 48 unit deal a couple months ago. So
Okay.
it's, we just got to see what's going to happen. We're in the middle of stabilizing it when things started going crazy with interest rates.
Yeah.
But that's what we got going on right now, a 45 unit deal. I'm no longer doing the property management. I used to do property management for all of our units.
Yeah.
Finally fired myself from that and hired a professional team.
Nice.
So that's kind of where we're at right now.
Yeah, that's a truly awful business. Everybody says that, but yeah. What, if you don't mind me asking, what are you rolling the money 1030, like when you sold the one you just sold a couple months ago? Are you 1031ing it? Are you rolling it into an opportunity zone? Like, what are you doing with that, or just paying the tax?
So funny enough is my partners own a CPA firm, and we're in the tax business. Like, what we do is tax strategy, and
Yeah.
we kind of got the structures and stuff in place where a 1031 wasn't really necessary.
Okay.
And that'd be a pretty in-depth conversation if you want to get into that. But we do help a lot of people with, structures where you don't even need a 1031.
Well, that's huge. I definitely want to get into that. I'm just starting to like, I'm in the kiddie pool of like cost seg study, like kind of in the cost segregation studies, because it that looks very appealing. Have you done that on your deal?
We've helped a lot of clients with it. We haven't done them with our properties just because we haven't held them that long.
Yeah, that's awesome, man. I definitely want to get into that. So it sounds like you're focused on multifamily. Are you focused Southeast Chattanooga?
Everything's been in Chattanooga so far.
Okay, cool. And you are you doing this full-time, like full-time real estate?
Yeah, I dropped out of school a little over a year ago. Actually, last week was exactly a year from when I decided to drop out of college.
Yeah.
So I'm doing this full time. It all kind of circles together, with the accounting firm. Like, we'll save people money on tax. They invest in our real estate deals. So I'm pretty much all in it.
Nice.
In everything.
That's awesome, man.
And Tim, can I ask? Sorry, Jamie. I just kind of want to ask what your thought process was being in school. like, it's just a totally different mentality when you're in school. Like how did you get to the point where like, oh, this is not for me, or I'm going to choose a totally different path? Like,
Yeah.
did you get, was your family like, what are you doing? Or like, did you get any of that kind of weird, glazed look of like, you're what?
That's a good question. It kind of goes back to the fact that I never wanted to go to college to begin with. In high school, I started getting into entrepreneurship. I was flipping sneakers. I started a real estate photography business. And, I was paying cash for college. It was just me, like the money I made doing photography is, how I paid tuition and room and board and everything. And I was studying entrepreneurship at UT Chattanooga. So things just started coming together. Like, I was meeting people. We had started this investment fund after I was about a year into school. So it was another year before I dropped out. So I had, I already was a co-owner in 48 apartment units. And, we had raised millions of dollars for other investments. I was doing all the property management, and like I was very busy. And then in the summer, I started traveling. I was going to conferences. I was paying for my own education elsewhere, like, real estate conferences, other things, networking. And it got to the point where also COVID, school just became Zoom calls, and, I couldn't sit through those. So I wasn't learning anything. I was making more money than my teachers. I had more entrepreneurial experience than a lot of my teachers. And it just didn't make sense anymore at all. So I just made a couple phone calls, and people kind of talked me into actually doing it. Actually, someone from the university was like, if I was in your position, I wouldn't be at this school anymore.
Wow. It's awesome. Yeah. I love it.
That's so awesome.
Mm-hmm. So really, like my family, they all saw it coming. Really only my sister, and she's a surgeon. She's a doctor. She's been in school her whole life. Like everything has been school and education. So she was not on board with it, but pretty much everyone else saw it coming. Kind of made sense to them.
I definitely want to get into that. There's this guy, I'm horrible about remembering. He's gotten pretty famous on Instagram and YouTube about like just asking people what they do for a living and like how much you know who I'm talking about. But some doctors are on there, and like he's been in Miami recently, and I mean these doctors are like making like $150,000 or like 200. It's like that's like crazy to go millions of dollars into debt to make that. What up?
Right. Go to school for 16 years to make 150 grand.
Yeah, that's like I've got a ton of questions for you, but just quick comment. It's just real estate's amazing because you can be a very average real estate investor. The only reason I rate myself as above average just because I pull the trigger and I do it, but even just being an average real estate investor, you easily could make 150. Would you agree?
Especially in the real estate market we had the last 3 years, you could buy a piece of dirt on the corner of the street and sell it in 3 months for more money.
Yeah, I might have done that.
Yeah, exactly.
All right.
So yeah, that's really the only real estate market I ever participated in. Is one of the greatest ones of my lifetime. But
well, it's sounds like you did well though.
Yeah.
Real quick on your fund. Did you raise it as a fund, the money as a fund, or did you raise it as a single purpose entity to buy the apartment?
So it was single purpose entity, and it was kind of like the first one was really just really close friends and family kind of thing.
Sure.
With the accounting firm, of course, too, we got pretty close contacts with people that have good money. We know how their businesses do. Like, hey, there's a real estate opportunity. You want to send some money towards it. So that's really, really how we've been in a really good position to raise money, is having those relationships.
Sure. That's great. All right, Charlie, don't worry. I'm going to let you ask questions in a second. I want to hear about the real estate photography thing. My wife and we got both me and Charlie. I think that's maybe how we met. Yeah. I was photographing his brother's wedding, and I sold a hedge fund like years ago. Started a nonprofit, took a year off, and then like I was trying to figure out what I want to do this year, and I helped my wife with wedding photography, and that's how me and Charlie got to know each other. And so tell me about real estate photography, like how, and I would love just the more transparency the better, but whatever you're comfortable with sharing. Like, I mean, how much were you charging? Like, how much were you making a month? Like, are you still doing that? All this kind of questions.
Yeah, so I don't do it anymore. It really started my senior year of high school. So my parents were in the vacation rental business. There were a few properties I could get, started with. My dad actually used to own the company. He sold it. So he was doing the real estate photography just because he enjoyed it. And then got me in the door to come do some of them. And then I had a bit of a portfolio and a website. So I would go to realtors and, real estate investors, people I knew that had properties they needed pictures of. So I eventually built a little bit of a book of business, and it wasn't really full time because I was in school, but it was pretty consistent income. Say the most I ever made in a month was $7,000, which was, not too bad at 19, I think.
That's incredible. And how many hours did you work that month?
It was a lot. I mean, I was doing photo shoots pretty much sunrise to sunset for a couple of weeks in a row. And then a lot of editing and all that stuff after sunset.
Sure. That's tough. Yeah. Okay. All right. That helps you get perspective. So that's a solid, you worked a solid 50, 60 hours a week to get to that 7.
Sometimes. Yeah. But it got to the point where I wasn't always working every single day, but I was making about $100 an hour when I was working.
Yeah. That's great.
It was pretty sweet.
Yeah. So were most of those jobs in Blue Ridge then versus Chattanooga?
A lot of them were. Once I moved to Chattanooga, I got pretty close with some realtors, and I was doing jobs in Chattanooga, which was a lot easier because I didn't have to drive all the way back. Right. But I was also driving a Prius at the time, so it wasn't too bad.
Nice. All right, Charlie. I've got a couple more questions, but I wanted you to chime in real quick. Do you got any questions?
Yeah, I mean, I've got a handful, but just trying to figure out where to start. So, Tim, I'm of the two, really of the three of us, I'm the most amateur here in this conversation, and still learning a lot. Still trying to figure out. One of the reasons I love talking with Jimmy is he nailed it. Like he pulls the trigger, and I'm more like aim, think about it, aim again kind of guy. And so I love, I'm inspired by people who just pull the trigger. And so, I love your story of how you just kind of figured your own path out. And I'd love to hear kind of now versus then, now that you're kind of in it, you're working with other folks who are in it, what your strategy is, or at least how you came to that strategy. Like, it sounds like you're doing a lot of multifamily. And I've kind of gone back and forth. Like, I see a ton of benefit. And actually, this is something Jimmy and I talk about a lot, but like, I see a ton of benefit, like great cash flow in multifamily. But when I think about people, like people's end goals, they don't typically like dream of living in a multifamily unit, And so I'm like, are you setting yourself up for a higher turnover rate? I'm just curious, like, what your thinking strategy is and how you got there.
Yeah. Well, to that, I would say you haven't looked at enough deals where the tenant's been there for 25 years, because I've seen a lot of cases where, they've literally lived there for 25 years. No one's ever touched the unit, anything like that. But I mean, that is a good point to consider. I would just say the reason I stick with multifamily is because I understand it. Like I really like it and believe in the multifamily model. I understand it. And I used to be really bad about the shiny object syndrome, and like every little thing that looks like it'd make me money, I would go after. And I've kind of just shut that off, because like I know how much money you can make in short-term rentals and how much cash flow, and flipping houses or wholesaling or whatever. Like, I know several people making millions and millions of dollars doing all of those, but I kind of just wanted to pick one. Like, I understand it, I love it, I believe in it. I could do the other ones, but multifamily makes the most sense to me.
Yeah. What about it are you attracted to?
I like that 100 unit deal and 1,000 unit deal aren't that much more complicated. It's just like more zeros on the paper. It's really, it's a very simple formula to make money in multifamily, aside from cash flows, like just the net operating income and the cap rate and the purchase price. So you say you buy it at a 7 cap, and then you raise the rent, and then increase the NOI, decrease expenses, and then add a 7 cap, it's now worth X amount, more money. So it's a really simple formula just to figure out what you need to do to make money on it. And it's kind of the same in most commercial real estate, but like offices and triple net lease and all that kind of stuff, I never really went into that and studied it and figured out how that all worked because didn't need to yet.
Yeah, I love it.
But, yeah.
I feel like I'm still trying to figure out like what is my niche, or is there a niche that I want to go after? Still kind of floating around, and Jimmy kind of hinted at this earlier, but I'm in the middle of a 1031 exchange, which I've never done before. So I'm like trying, I was like researching it as I was contacting people, to help me with it, and in the middle of while I'm making the deal. And so it's all kind of new to me, but because of it, I'm kind of at this point where I'm like, oh, like I've got a chunk of change to spend. Like I could buy a 20 unit building, or do I want to buy a bunch of multifamily, or do I just want to buy a ton of single, so I'm still kind of like big wide eyed and looking at the market and looking at all kinds of markets. And so I really appreciate that perspective.
Yeah.
So on that, Tim, like I'm obviously me and Charlie are a lot older than you, but I've learned just yesterday, I met with a guy. I was like, he kind of looked at something at a totally different angle. So I would love for you to kind of like just analyze our business, or just kind of advice you would give us. I build single family rentals on the side. Like what, if you were to, I know you're focused on multifamily, but if you were to tackle that, like how would you go about it? Charlie's in the middle of a 1031 deal, got some money to place. Like, what would you do if you were him? And then the third thing, I guess, kind of related to all that, is just the apartment, like the deals that you find, like how are you finding them? What are you doing now for deal acquisition strategy?
Yeah. So to the single family build to rent, that's it. Are you building just like one at a time, or you'll build multiple, or how are you doing that?
It is minimum, but yeah.
Okay.
Have anything in the pipe, like everything in my pipeline is like 8 to 92. Yeah, it's big. Yeah.
Okay, I gotcha. Yeah, so I really don't know a whole lot about construction, and it kind of scares me because there was a deal I was going to do on my own where I could get a piece of land for a really good price and then build a cabin. It was actually back in Blue Ridge, and they were like, oh, we got to do all this, like these things, whatever, and it's probably going to take 12 or 13 months. I was like, oh, I don't want to do that. I don't even know where I'll be 4 months from now. So I backed out of it. So I think if you understand construction, you could probably do pretty well in it, because I'd imagine there's a lot of people like me that are, pretty scared off by it. But I mean, as long as the numbers make sense, like, you can get it built in this timeline. You can get it built for this price, because you can get, I would imagine you get very good rents on a brand new house.
Yeah. It's just less competitive. I mean, that's like my thing, is like own like buildrentalproperty.com. Like if it's just my thing, it's you're just not competing. It's just very competitive. I look for low hanging fruit, like absolutely.
Because if the numbers make sense to you and how to do it, you can do it. But if there's a deal on the MLS where the numbers make sense, there's gonna be 300 people trying to do it.
Dude, that's totally it. And it kind of is exacerbated, I think, for us in Tennessee, because like the whole California, Illinois, New York, Washington, they're all moving here. So it's like just that much more. I mean, I don't even feel like I have an advantage living here, because it seems like the Californians have all these like bulldog real estate agents. I mean, every real estate agent I know has a list of 20 Californians wanting to make a cash offer for like $1 million or something. So I would just rather buy a lot or something that nobody wants, and then just, like last year I built 4 brand new houses, and I don't think I could have bought 4 houses off the MLS or Zillow or whatever. So, going to Charlie, so like, what would you do if you had some 1031 money right now? Like, go buy an apartment complex, I'm assuming.
I'd probably look for an apartment complex. Yeah. There's not a ton on the market, but you can call people off market, and they're all have their ear to the market and they hear what they can get for prices right now.
For
So
sure.
it's probably in a good position to at least get something.
Yeah. Okay.
Yeah.
And then
Especially, oh, go ahead.
Is that how you're finding your apartment? Just like calling, like emailing directly and stuff?
We get a lot of them from brokers and other things like that. So every now and then I'll just drive by an apartment complex I'd never seen before, and I'll just look up who owns it and give them a phone call. But every one that we've bought so far has come from broker.
Cool. Okay.
Mm-hmm.
I want to pay you a fee for that lot in Blue Ridge that you were looking at if you email it to me.
Okay.
I'll pay you a fee or whatever you need to.
So Tim, one of the things that because of my 1031, there's several properties wrapped up in them.
Mm-hmm.
Whatever I purchase can't be more than 200% of the value of my sell price. So that's where I'm kind of like, so I'm looking at like 1.5 million as being the 200%.
Okay.
So it's like that price where it's like I can almost
you get
find
a 10 unit, 10 or 12
yeah,
unit.
something smaller. Yeah, that's kind of yeah. Do you have any recommendations as far as like if I'm looking for a building or a unit that size? Or like danger traps I should look out for, or because typically what I'm seeing are like older buildings that people have sat on for a while, probably haven't repaired much, and are looking to to get out of it.
I'll tell you about the first 2 deals I put under contract when I first started getting into real estate. It was like I had never been on LoopNet before, like never even looked for multifamily real estate. And I see this deal, and it was a 5 unit in like Eastlake, or kind of close to the Eastlake area. I was like, they wanted 250,000 for it. I was like, okay, for 5 units, that's not too bad of a deal. Offered 200, and they accepted it. I was like, oh, and I really didn't have any idea how long it had been sitting on the market. So then it's like one of the units was Section 8. The rest of them were regular rentals in a very bad area. Like I can't even remember what they were paying in rent per month, but it was a terrible idea. like things like that. So I would just really like do good due diligence on a deal. See the inside of every unit is an important thing that someone told me. Actually, the guy that bought our last deal, he's like, you just want to see the inside of every single unit. Like, he's like, that's his rule. He's bought over 300 units just in Chattanooga in the last couple of years. And he's like, you need to see inside of every unit, just to know what you're getting into, how the tenants are treating your property, how they've been renovated, how they've been repaired by the previous management. But the numbers need to make sense. You could pay a little bit more probably, since you have 1031 money that has to go somewhere. But yeah, just dive into it, know everything about the property before you buy it is an important thing. Yeah, and if it makes and if it doesn't make sense on the back of a napkin, it's not worth looking at.
That's awesome. Thank you.
Well, I want to be respectful of your time, Tim. You got anything else? But they can find it. I am Tim Stone, correct, on Instagram?
Yeah, I am Tim Stone. I got all the time in the world if you got some more questions.
All right. I think, man, that was like really helpful. What do you mind? Are you still? I'm assuming I don't want you to give away any secret sauce, but I'm assuming you're kind of in the Southeast for apartment deals.
Yeah, in the Southeast. Kind of been more interested in Florida recently. I've spent a lot of time in Miami the last couple months.
I love Miami.
Love Miami. And even Orlando. Like if the people that are leaving Miami and leaving Tampa because it's getting more expensive are going to Orlando just because it's Central Florida. So really like Florida. I was in Houston a couple weeks ago, saw how much multifamily they're putting up in Houston. It's but I wouldn't really look anywhere outside of the Southeast. I was talking to a lady yesterday that's trying to buy some multifamily in California. She's like, would you guys be interested in that? And I was like, I don't think so. I don't think any of our investors would be interested in that. Like you should hear what people in Tennessee say about California is what I told her.
there's this guy, I know we all have crazy California stories, so I won't go into this, but yeah, I didn't realize there's a guy I know that's what he does, a sub-institutional class multifamily in LA. And like, you literally can't evict for non-payment in LA. And it's like, I don't know how you run a business. And he's got a very substantial, I mean, he's got over 1,000 doors, and you can't evict somebody for non-payment of rent. Like, that's scary. That's so,
Yeah.
you know, because obviously the banks can foreclose on you for non-payment. What this is kind of connecting you guys and about something I have no clue about, but you can, Charlie, 1031 into a fund, but it's under like a tenant in common kind of thing. I don't know. It's pretty complicated accounting wise, tax accounting wise, and it really has to do with the fund itself if they're going to allow you that structure. So that's something you could look into, Charlie.
Interesting. So it's like does it have to be like a designated fund under an LLC type of thing, or?
Yeah, don't ask me any details.
I've heard of that as well, but I don't know anything about it.
Yeah. The only reason I even know it's allowed is do you know who Keith Wasserman is at Gelt, Tim? This guy, he's like, I think I'm a little older, which is so embarrassing. He's like late 30s, and I think he has over 10,000 units. He started in Arizona. He lives in LA, but he probably has over 100,000 units. His company's called Gelt, and he allows it. And very successful. What I like about his stuff is he publishes his performance, he publishes all his properties and all his investor IRRs, so it's pretty amazing, like all the returns he's done. So yeah. I do have to run, but Charlie, do you have any other questions?
I've got some non-real estate related questions. I'm curious if if money were no object, like what, but you had to contribute to society, like you had to have like a job, what would you choose?
It's a good question.
Jimmy said roofing.
Roofing would be his.
Yeah, that's his.
Yep.
I don't know. That's a tough one. I really like what I do now. I mean, I don't necessarily plan to stop that, but of course money's involved.
Yeah.
That's a good question. I'd probably be a podcaster or something like that.
Nice. Yeah.
Yeah.
Love it.
Yeah. I don't know if that's my truthful answer, but that's the first one that came to mind. So I'm just going to say it because we're on camera.
No.
But
yeah, I love it. I love it.
That's the thing about podcasts. I'll ask people questions, and like they say the first thing that comes to mind, but it's like, is that really the answer? Or is it the first thing you thought of?
Right.
So that's kind of the first answer I thought of.
Yeah. It was good. It was good. I like it.
All right.
Yeah. Well, Tim, thanks so much for your time today and your wisdom and giving us some pointers, or me more than anything. Appreciate it.
I appreciate you having me on.
All right. I'm Tim Stone on Instagram. Come up. Thanks, man.
Thanks.
Thanks, Tim.